Hey everyone, hope you're well. Good morning, good evening, good afternoon. Hope everyone's having a great Friday. Let me know how your day's been, what's been happening. We're a little bit late to the party today. Wait for a few people to jump on before we do our run through of the treasuries, and then we will jump on to the indice markets. Alex, how's it going? Knockout, good evening. Good evening. How are you guys doing? How was your trading day? What's happening? Jengi, hello, hello. Hope you guys are having a great Friday. It's nearly the weekend. We have a couple of hours to the close, and then that meets another successful week in the bag. Hopefully, you guys had a good week. We had a nice day on the treasuries. We had 7 tickaroos on the 10s, and we had 4 ticks on the 30 year. Quite a volatile day in treasuries, to be honest. As far as treasuries goes, we were bidding the highs before open, and then the PPI data come out, which actually come in pretty hot, to be honest. I was expecting to be, it was a real beat, so not as clear as the CPI data from yesterday. And in essence, what happened is we saw treasuries pull in. We basically went down to overnight low, and then the market has just essentially shrugged off the PPI data and essentially went bid. So I've been buying treasuries ever since we were above the overnight low today. So nice way to end the week. Oh, nice, Jengi. That's what I like to hear. Oh, you tried a bit of, yeah. It's not. I think my majority of my plays, to be honest, was I bought 1.5s and bought 2s, took like 3 ticks a few times, and I think just before the market pulled in on the 30 year, I think I bought 25s and was out at 28s, if I remember that was the trade. And to be honest with you, that was a really good trade. I only ever enter on limit, so I got filled, and then basically we just lifted into the next 2 prices, and I was out in a few minutes. It was a really sweet trade, and it was with some size as well. So happy days. So nice end to the week for me from treasuries. A really non-stressful week. I would say Monday, Tuesday, Wednesday were pretty. Who They were boring. The 10 year for those 3 days, 20 tick range for 3 days. So look at how ES has been, and then I've been trading the 10 year when it's been 20 ticks for 3 days. So you can imagine I'm glad it's Friday. So yeah. So one thing I would say, knockout, is I would do not use the micros on the DOM. If you've got, do you have Sierra charts, dude? In fact, it doesn't matter about Sierra, but what I would do is, um, when you're trading, watch the mini, but then you can cross book it almost, and when you execute, you take a position on the micro, because the micros can be a bit fusty, in my opinion. You're better watching the mini for order flow, just as a heads up. just as a heads up. But anyways, let's jump in to so this is the CPI yesterday, where we basically went crazy bids. I was basically buying. The market point of control shifted to about this sort of range. We pulled down back to the next support area here, and have filled out that area on the tens, and then essentially swept below that for the news, and I've essentially just been buying this all the way up, to be honest. Not in one fell swoop, but that's been the plan of action. Right, let me save this and close this. Seeing as you guys are not going to want to watch treasuries, because it's like watching paint dry. So we'll jump on here. Did a little bit of configuring here, where we've got NQ. So let's have a look at today. Wow, some range, yeah. Thursday and Friday is always higher volume. Monday, Tuesday's the least volume, so I can't say I'm surprised. And it just goes to show you, jeez, how much of a stop run this was, right? Grabbing all the liquidity lower. And the market's just absolutely shrugged off that data. Wow. That's just straight line stuff, isn't it? Look at the delta today. Plus 24k. I'm hoping that when everyone joins, that you took the initial balance rules today. If you took the initial balance rules that we've been discussing on the stream, you probably would have had a really good day today. Otherwise, it's probably been relatively painful. I do think we need to have a sell-off. This has been a wild day. How many ticks is this? What the heck? Let me full screen this. Let's combine these days here. So from the top to the bottom of today's range. Jesus. 344 tickaroo range. That's crazy. So we've essentially been one time framing since, and the initial balance was set. Now we have done our classic sweep here. So we draw this sort of level here. So I wouldn't be surprised now if we do have a sell-off to finish the session, to be honest. And it would make sense to fill out this area down here. Golden Rose, hello buddy boy. Good evening from the UK. You can put a word in for me at the Chicago Board of Trade and get me a discount on the seat lease. That would be great, buddy boy, if you could do that. Starting to trade enough size in treasuries where it's starting to make a difference. At least for me anyways. What do you guys think of with us taking away the inside prints on the Russell and the Dow, just using for correlations and making NQ and ES slightly different? What do you guys think of that? Oh, knockout, I can't really remember. I think we discussed it yesterday, maybe a couple of days before. If you ask when Trader Boy comes in, I think he made a note of it. My memory's a bit mush at times, so I'm sorry I can't tell you off by heart. Do you know what would be easier, dude? If I just went over them for you? How's about that? Would that work? In fact, I'm going to split that out. And then I want to draw where the close of this actually is. It's the start of the red line, right? Tom, how's it going, buddy? Yeah, so the initial balance is in essence the range for the first hour of the session. And because let me full screen this, and it maybe make a little bit more sense. Let me sort this and make this a little bit small. Look at this day. This is fucking wild. Wow. So initial balance rules. As we know, markets are in balance somewhere to the tune of 70 to 80% of the time. They are, sweeping a high, reverting back to a high volume node or a point of control, which is the type of stuff that you see in pre-market, where you can almost. I mean, it's funny that where we draw these rectangles, and then in pre-market it just sweeps the highs and sweeps the lows. Typically it doesn't even get as far as that, and then we sweep all the liquidity down here and then go up, right? So these strategies work extremely well in ES because ES loves to go to pools of liquidity. Now, I'm giving you some context for this before we jump into the initial balance rules. So there's method my madness here, so hold on a little second. So because we know that strategy is dynamite and fading highs and liquidity pool areas back into a point of control or high volume nodes is very, very, very good. The trouble is you then tend to fade everything. Okay? So you need to have some rules to put in place to stop you doing your arson and just losing the house on those days, right? And what I've done over the years and the rules that I've put in place for ES specifically, something I always had in place, was if we are above the initial balance high and initial balance low, we are in price discovery and we are no longer fading, okay? Until we get to the next clear and obvious point of resistance, such as up here, right? Because once you get above the initial balance high, funnily enough, we then have a pullback, and then you're then looking to go with the trend for that day, right? Once you're above the initial balance high. Same with the initial balance low. If price was below here, right, and then it retests and does something, you look for absorption on the offer, and then you're looking to hit into the bid, and sort of drive price down, right? But you need to have some rules here. So when the market's one time framing and it's above the initial balance high, you're no longer looking to fade. Okay? And the reason why those rules are in place is to at least give you a box so that you can try and control your fading, because you tend to fade everything. So this is a really key level up here. This is the one we drew out on the market profile. You draw this out, and I would not be the fact that we had such a crazy open here. Initial balance is super high. You don't fade until this is set, right? And if it's above this, then you're not fading until it gets to a really clear point for you to fade. And again, it's not a coincidence that we literally tick this, If we draw this here, you can see when it enters. We literally tick this, take out some stops, and then we're now pulling back. And then we'll probably correct into this sort of area down here. Here is the POC for the session. So let's mark that out. Here. This is the sort of POC for the session, right? Does that make sense, Knockout? Daniel, how's it going, buddy boy? Mike, how is it going? Tony is in the house. How has your trading been going? Did you guys end the week? Let me minimize this. But does that make sense, guys? You've got to have some rules built in there so you don't potato. Look at the amount of block buying that's been coming in. Jeez, oh. No problem, knockouts, buddy boy. No problem. Sin. Yes, I mean, I suppose anyone that is at least got some knowledge of market profile has done a little bit of digging into the Stadelmeyer and Jim Dalton stuff at some point in time. Now, I would say I take some of their stuff, some of the nuggets, and have applied it in my trading over the many years. Um, but I don't say things like, we've left a poor high, we're definitely going to go and repair it, or um, I'm going to target initial balance high extension or something like that. Do you know what I mean? I don't do anything along those lines. My trading is very simple. I have a profile extension where I like to go with the trends to basically create another, to hit the step in the profile and create a double distribution. Or I have an out of value fade where the market is, we're sweeping a high and, it's likely in that time that we can be fading back to the point of control or value area. That's pretty much my jam. No problem, Mike. Hope you're enjoying, dude, and safe travels. Nice, Tom. Nice. Yeah, exactly. This is the $1 million question that you'll ask yourself all the time is the reason that keeps us coming back is variation on the theme, right? Some days they'll bang this 10, 15 ticks. Some days they'll take it by a few ticks, then they'll absorb and then drop it. Variations on the theme. This is why no trade setup is ever really the same, and discretion and experience is what takes you there. And also as well, if this is not an overextended market, I don't know what is, right? So there has to stop somewhere, and the most likely area is going to be basically the all-time high. So it hits the all-time high, sweeps it a little bit, and then will sell off. So a couple of two things. I mean, look at this delta. This is just insane. So there has to be some profit taking before close of play, right? That is something that is glaringly obvious because there's either been absolutely no selling today, and there's been tons of buying, which it's clearly one-sided, right? But very typically, as we know, a lot of these trades are not carrying over open interest, especially not into a weekend, to be honest with you. So the two scenarios that I suspect here, in my opinion, is we're going to dump and really start flirting with the session point of control at 88s area, 87s, right? Or we go up and run the highs, basically to get some more short positions and get some more stop outs up here, and then we then correct. And as I say that, do you know what I'm missing? I'm missing the pen. Let's get up the pen. Yes, I would have. Well, I'm in the same boat as you guys. I would have liked to seen a slightly bigger sweep, but I would need to have been watching the depth of market at the time to give you an accurate reading. But typically, I would want to have seen how they hit the highs and did they sweep it? Was there a stop run that was present? And with this block buying that we can see there, I want to see how it looked at the highs because we can see there was 476 delta, 495, 428, 200. So we're talking a few thousand contracts that was absorbed. I'd want to see how that looked. And then I would need to see when they hit into the bid, was the bid being pulled for us to get back down. So I would have had. You have to be in the moment in order to you know. I can't look at a candlestick chart and tell you if I would have took that trade. I would have had to see what behavior was on the depth of market at the time. Depth of market is literally your final confirmation part of that, right? And what I think, so the couple of options, right, is we just, sort of faff around here, do this sort of stuff, right, and then dump back down to this sort of area, and we've, because this has been the highest traded area, we do have the possibility of up here turning in to a point of control. We're not too far away from it. This is a lower volume area down here, which we can see. So I'd like to see this be filled out, ultimately, this area. So that's one option that happens. The other option that I think is we do something, we've came down, we do this, and then we do this. And ultimately buyers will try and defend this area that they have done. So buyers will defend here, because if they don't defend here, when price breaks through this low volume area, it's going to go very quickly. It's going to move down through here really fast because there's not a lot of volume traded today. And then people will take profit down at 88s. So we'll see. The last option, or the least probable in my opinion, is we just moon. We just break all-time highs, continue going bids, But something tells me in my spidey senses that that is going to be the least probable, but still on the cards. Mike, so good question. NQ doesn't really need as much oomph for it to move. You can see that by the book, of course. So if I was looking to take that trade, ultimately I'd like to see NQ have already carried out that behavior or something similar to that effect, because we know NQ, in my opinion, tends to lead. And put it this way, ES is never going to be doing this, right, down here, if NQ is continuing to smash highs, right? As we know, they move in tandem and tend to have a very good synergy with each other. Nice knockout, buddy boy. Hopefully that made some sense, but feel free to ask any questions that you have. For sure, feel free to ask any questions. So I'm hoping that we do something a little bit exciting, that we don't faff around. We have an hour or 50 minutes until the action comes in. Morning UK, that is. Yeah, I think I'm just not a fan of pre-market, to be honest. I think is actually really conducive to just fade everything pre-market. And my general stance is if pre-market is extremely net long or net short, then I would say there's probably about a 65 to 70% chance that we correct at least to the midpoint of pre-market. The least probable option that happens is, say we're doing this at pre-market, right? Up like this. This is pre-market. And we have open. Open is here. Let me get my different colors out. Right? This is open. Okay. And then the least probable setup from this is, you can see that pre-market is, net long. It's just been going straight up. Sometimes what they'll do is they will open test drive this, drive it up, but what you'll really find is they drive it back down, do something like this in the opening, right? Typically we'll take the liquidity pool down here, and then ultimately what they'll do is then they'll probably drive it down back up, right? And if you notice, the initial balance high and initial balance low are probably just being set, right? And then This then dictates if we're going to be in balance or not. So we'll maybe do something like this. Then we'll maybe break the initial balance high, right, or sweep back in. And this is where you have a very classic Monday and Tuesday where it does this sort of behavior. Just basically turn it around for short, right? That's a very classic day, and that's what happens when you have, a sort of distribution curve, something like this, right? That's typically what those day types will look like, where you have the extension here is this, the extension down the low is this, and then all the volume is traded in this sort of area, right? Make sense? That's typically how you construct that's the candlestick way to construct it, but they're doing it where they're correcting the net long position, sweeping the lows, getting out of their short positions because the net short from up here, then they work the bid, right? And then take some, they pull the offer, but people that were short here then need to cover, and then before you know it, we go up and down, and end the day pretty much where we started. Yeah, treasuries. I've noticed the last number of weeks. In essence, what's happening is there's a lot of spread trading going on. So we're seeing, for example, 10-year sells off, aggressive delta, prices going down. Um, the 30-year has actually got positive delta coming in, but it's actually been absorbed. And typically that's just a spread trade that's taking place, or they're effectively working on certain parts of the curve. How about the Dow? I do not. Do you mean the Dow didn't sell off yesterday? Is that what you're meaning, Daniel? I'm thinking that's because it doesn't have the doesn't it's a different weighted price for that, right? So it's not worked out the same as the Russell, NQ, and ES. And as we spoke about in the Discord as well, ES is actually, even though it's at all-time highs, it's actually quite frightening what it's at the moment, because as we discussed, if it wasn't for the Mag 7 and the big boys, we essentially would not be at all-time highs. They're the ones that are in essence putting in all of the gains. 40% of the stocks in the S&P have put in negative gains this year, which is actually frightening when you consider where we are. So if these big boys bleed, then we're in for a world of hurt. Yeah, and that's the reason why, Daniel, is they basically are missing those stocks. The ES and NQ are literally just living and dying by Nvidia, Tesla, Meta, Google, Microsoft, the big six or seven. They make up 27% of the S&P last time I did my math. And the Dow's just weighted differently for that. My name is Lorne. Is more than 30%. Wow, that's nuts. But that's the scary thing here, right? If we take out those 6 stocks, probably 7, right? The other 493 of them are underperforming, and yet we're still making all-time highs. Does that not get anyone's head scratching and think, you know, geez, oh Colombo, we could be we could be in for a spot of trouble if these big boys bleed, you know? Some all that takes is some profit taking, and some unreported data, and then we have a 300 point pullback or something. Yeah, it's just a weird this I don't know if it's a tech bubble with AI or whatever's happening here, but we're definitely in, in a mania. If you brought up the tulip bubble or a BTC chart, it looks the same as the Nasdaq and ES right now. Seriously. Yes, and it certainly moves fast, dude. Certainly moves fast. If anyone trades order flow in that, they like jumping out of planes. Ah, gosh. Oh, there's 100 lot here. I wonder if this one's fake. I'm looking forward when this see these 200 lots here. These guys have overstayed their welcome. Following price. They're really distorting the order flow. These guys, man, they're doing this for a reason. And I want to know how this is not against the rules. To be honest, of the spoofing rules. They're not even hiding it. You know. Here we go. NQ's dumping. Let's see if we can continue on. So if you guys remember the couple of playbooks that we had drawn up there, let's see which one happens, with the least probable being going to the moon. That's why, Daniel, as we discussed, is all the money is flowing into your Apple, Tesla, Nvidia, Microsoft, Google, Apple, if I already said that one. If you take them out of the equation, we wouldn't be anywhere near where we are. And what goes up has to come down, right? And this has been pumped now by the fact that this is election year. Central bank is basically holding things, and now we're about to cut. We're definitely now getting cuts with the current setup. Now, well, wouldn't say definitely, but it's very, very, very likely that we're going to cut now. And typically stocks like cheaper rates, just cheaper money for them. And you better believe that they'll be doing buybacks as well in that. So it means that they can borrow money for cheaper, buy back, so on and so forth. Colin, I suppose that's a good question, but to be honest though, mate, I have these charts up here, where I can see the moves, and I have it all, so it's all respective, so I can see here that it looks like it's moving, but actually, it's not moving at all. But I get what you mean though. Like you think it's moving a lot when actually it's not moved at all. Oh, nice. I wouldn't advise trading it, Sin. Definitely use it for correlation. I think we'll come back to 87s. Yes, I think so, dude. That's where I think we're gonna probably try and go down, is we need to take some profits, right? I'd be very surprised if we just, faff around here and do something like this till do like this. I can't see it. I think there's going to be a bit of a sweep of the lows, and just remember that this area here is a really low volume area for today. So if we do crack this with some size, we're going to have a double whammy. There's a low volume area, and there'll still be people buying here expecting this to go to the moon when they're going to start covering here. So you have people covering at this level, which also helps to push down, and then we'll see how we react at this level. So we'll see. And we've already hit this level once, you know, here, here, and here. So we've already hit it 3 times. So we'll see how it looks. Exactly, Colin. Exactly. That's the way I see it, dude. Here we go. Right. I should have got this exact out. But watch them hit it by a literal tick. Let me get my... they hit it by a tick. So 9725. Let me clear. Okay, so if we do hit this level, I suspect before they hit it one more time, they normally like to pull it back in, do some absorption. There is some absorption here in the offer, so for this to not go back in the range, you want to see the offer stay strong right now. And NQ needs to go back down. So this is not going to be breaking the lows if NQ is up here. So NQ probably needs to get, I would say, somewhere down about here for us to have another retry of this level. So we'll see, and then what I'm going to do here is go to the cursor and make this delta a little bit bigger so you can actively see what is coming in. Yeah. Is that easier to see? Okay, so NQ is pumping. We need to see this offer stay strong if we're going to at least crack it soon, but the volume is coming in the next 35 minutes, so... Joe, how's it going, buddy? I do both. I do both. I have 2 instances running with Sierra. I trade prop and trade with Edge Clear as my broker through Teton order routing. Very good solution. I don't actually have to pay for any of the clearing or routing as such. It's free with Teton, which is very nice. Very good, very nice. Which is great. Okay, here we go. Watch the delta. Here. We want to see this, you know, going to work its way down the way. I copy prop, but in Sierra, because you can't be logged in to 2 order routing platforms or copy them simultaneously, you can copy. Sierra's got a fantastic trade copier, but you can only copy within the same account. I use the Denali data feed for both instances, but I execute on separate instances. And to be honest with you, I like to diversify my risk that way. So, you know, I trade prop one day and personal the next, and so on. I don't really like to copy them both, you know, because I already copy on the prop accounts. I have used a lot of them over the time, but the one that I have the most set up with is Top Step. But to be honest with you, they're all pretty much the same. They're just about to put me in a live environment with them, and I, if I'm honest with you, I don't know if I'm going to do that. I need to make a video about that at some point because I don't want to pay pro rata fees. I already pay my own fees. I already have everything set up with a broker. I don't need their setup, so I may just, when you do transfer it to live, I may just put it in a personal account if I'm honest with you. But I'm undecided. Yeah, Top Step. One of the main things I think you guys should be looking at with these accounts is how easy is it to get the money out first and foremost, right? And if they've got trailing drawdown, scrap them. Trailing drawdown is so far away from a normal market environment, it's not even funny. End the day drawdown is hard enough, but intraday drawdown, that means you can be up 300 quid in a trade, right? Goes back to break even and you lose 300 when you've actually only scratched. It's just absolutely stupid. But I think some of the large firms, if I'm honest with you, I don't think they'll be here for much longer. Right, we are certainly trying here. Let's see if this bid can be pulled. NQ's working its way down. The Russell is leading the way, pumping itself, which I would like to see the Russell work its way below POC, to be honest. Yeah, there's a lot of them that do that, man. The intraday trailing drawdown is so predatory. It's ridiculous. It's absolutely ridiculous behavior. Yeah. Well, what do you mean by you do feeling you're being watched as such? I've heard really good things about AMP as well. They're probably would probably be it was a toss up for me between Edge Clear and AMP, to be honest, for a personal broker side. Yes, and basically trailing drawdown is intraday trailing drawdown. So say this is your break even level, right here. So you make some money, right? This is intraday, meaning while the trade is open. So you make 200 bucks here, right? And then the trade goes back to your break even, and you then scratch the trade at break even, right? What trailing drawdown then means is your max drawdown is actually now plus 200. So you've actually lost 200 in that trade because of the intraday trailing drawdown, which is absolutely scandalous. I can't with any confidence recommend a firm or even recommend anyone that gets involved in that. That is just, what even is that? I mean, this is not this shit is not a thing. It's just so people lose money in trading, right? In a personal account. Never mind this. Sin exactly, exactly. So if you say this was 5%, right, and you risked, I don't know, say this $200 was 1% of the count. When I went back to break even and you scratched it, you actually lost in the trade because the drawdown follows you. You know, this is your max loss here, it's now here, right? Even though you actually only scratched the trade. It's brutal. I mean, surely to goodness, and then you have, then this is, I'm not going to rant. I'm not going to do it, but um, yeah, no, I'm not going to do it. I'm going to start in another one of my rants. Terence, how's it going? Nice of you to join us, dude. And I'm really pleased for you that you found the stream when you're new to trading, because we can try and cut out all the bullshit. So there is a description in the description of this video. There's a playlist. The playlist is here. Now let me grab it for you, dude. Yes, here it's here. It's in the description of the video. I'll put it here for you. Okay, this is the order flow playlist. We cover tons of concepts in here, what markets you should trade, cover everything in there, man. Work your way through it. There's tons of content in there. I've tried to create it in a sort of structured manner where we're trying to look at what markets, we discuss journaling, we discuss risk management, what it takes to be profitable, who the competition is, then we go into scalping setups. There's quite a lot of content in there, and it took me a while to build it all, but I'm continuously adding to it. The weekend we're going to work on a Delta video for everyone as well, and over time I want this to be almost like a sort of cheat sheet to try and get you into the right perspective for trading. Okay, and by all means, please when you're starting as well, if you're new, try to take what you see on YouTube as a pinch of salt. I know this is coming from someone that's on YouTube, but the majority of the stuff you see in YouTube, some of the big YouTube channels they don't trade, you know, just to be completely blunt with you. So take your time, don't strategy hop, okay? Stick with the strategy and get a journal. One of the first things I want you to do is get a journal. Actually, there's a link to the journal to go and trial it out. Do it on Sim, try it for a week, see what you want. Because when you're new starting, you can save so much time if you start with a clean slate, and basically cut out all the nonsense so everyone loses years, you know. I would actually like as a project to take someone to be completely new to trading and see how quickly you could make them profitable without just ignoring all the nonsense, because I feel a lot of the stuff it ends up clogging your views and changes your beliefs. If you don't scratch the trade, no, so your drawdown, whatever your intraday drawdown high was for that's your new high. So it basically your regardless if you win or lose the trade, that's your new high. So Apex basically want you to be taking profits all the time at your account highs is effectively what that means. You know, while you're in evaluations and before that stops. I need to catch up on some of the questions here. Avi, you saying for this we'll call it the capping algo, these guys here that are just capping, yeah, I don't know how they can get away with that, to be honest with you. It's so blatant, to be honest. Exactly, knockout. There is a lot of BS there. No problem, Terence, buddy boy. But yeah, just take your time. Don't strategy hop. Uh, honestly, it's great that you're just new to it because honestly, I wasted years faffing around, going from all this shit that's there. I'm training for a long time now, and I lost at least 3 years faffing, faffing around. But take your time. You need to be like a sponge, and don't rush it as well. Does that make sense there, Sin, with how I'm explaining that? Pretty much, you need to take the P&L highs all the time. And it means if you put on a large lot size, right, trying to pass the accounts quick or whatever, if it pulls back at all, um, you can actually blow the account. Think about that for a second. If you put on a large lot size and the trade goes massively in your favor and goes back to break even, you could actually blow the account on Apex rules and you didn't even lose money. How stupid is that? Nice turns. We'll definitely start with that playlist, dude. Work your way through it. Any comments or questions you've got, leave them on the video. I answer. I literally answer every comment that's on the videos. It's actually the most effective way to ask questions because you can see the Discord now. Great, but there's we've got over 250 people now in the Discord, and it's just more structured if people ask questions on the videos about certain things. Um, A, because there's not as many comments, and B, it allows me to structure it for that video so I know specifically what you're talking about. John had done that in Apex. Yeah, exactly, John. And that's the thing. That's the thing, dude. It's just not like it's honestly. You need to go with accounts that's fair for you to trade. That's just not fair. Right, let's see if we can get some size in. Watch NQ here. We need some size. We need to break 97 and a quarter here with some oomph at least. We broke it by a literal tick. Good, Terence. Good. Good, dude. Yeah, trading's fun when you start and there's loads of new information. It's unknown, but just keep your wits about you, man. Here we go. Stop run gonna happen soon. Come on, hit it. Someone's still absorbing and defending here. 300s absorbed. Let's see, there's an iceberg here. They need to crack it. There we go. There's the low volume node going. Bada bing, bada boom. As we discussed, we're now going to go down here, and this collapses very, very quickly because it's the low volume area. Woohoo! Wow. And then watch us bounce at the POC. Wow! It's going. You know, this was like my playbook. It's like my Hail Mary, Tom Brady, Belichick, we draw up that play. And when you look at that, we go right back to POC, then we take some profits, we always chop around the point of control. Yes, exactly, Colin. I do, dude. I draw out my key levels, look levels to do business, make notes on them, and then mark them on the DOM. But bearing in mind, I really trade treasuries these days. Seems to be though. I don't know. This I don't want to say it's glaringly obvious, but this we discussed this play here, you know, and it's playing out. The least probable one was to go to the moon after being super extended, right? But we did. This is what we're discussing. We didn't even get the sweep up. The two options most likely were to do this and in this, and then or we just take this level, go through the low volume nodes, go back to here, chop around, potentially fill out this area. There's a low volume area, you know, and look at all the negative delta coming in as well. So fresh selling come in. Avi, they're basically just like a range capping algo. My opinion, they're there just to basically freak out the other algorithms to distort the book. I wish I could give you the exact reason why, but they've been there now for about 2 weeks or so, consistently, maybe three. No problem, Tom. No problem, dude. Did you take that literal play that we drew up, Tom? That's it. Coming next week. $35 a month for a signals channel. What a lot of nonsense that is. I don't know how people honestly do that. Those. Oh, and that's another thing, Terrence. If anyone tries to sell you signals, run a mile. The reason being, by the time I say, hey guys, buy at this price, ES has moved 5 ticks, so the trade is no longer on. You know what I mean? Doesn't work. Drop it, pins my eyes into that. It's embarrassing. So yeah, we need to crack here, but likely now I think that's going to be the play. We're going to faff around until we get to the 10 to 4 line in US, where we're going to see the volume come in. Um, what do we expect next? Let's have a little looky. Okay, so let me get my triangle out. Not triangle, rectangle. Okay, so stops are going to be down here. This is now the value area low down here. I would like to see us get down here. Pretty improbable. I think we're most likely just going to chop, in and around this range now. To be honest with you. And typically, when you get this sort of move prior to the data comes out, the last number of times this has happened on stream, where we've seen a little bit of an oomph prior to the market on close data coming out. The market on close data has kind of been a little bit more rotational rather than directional. Yeah, exactly, Pike. That's a great way to look at it, dude. I hope you're well. And that's actually a fantastic way of putting it, dude. You almost need to know, what everyone is doing at all times and just have an overall holistic approach of what's happening. I hope this absolutely dumps for the sake of a good talking point. So we have to break VWAP and we have to then close back above initial balance high as well. So we have to break below initial balance high, which is the next rough point. If we do get down here, this is going to be an interesting close, by the way. I really hope there's a huge sell-off that happens because we can go. You guys know that a selling market, there's nothing quicker than a market that's dumping. And it's plus how much delta just come in there? 2k. There's a lot of negative delta to take away. Imagine we finish the day flat. This could be a bloodbath. Nah, we're not going to crack below this without any form of pullbacks and stuff. It's just not going to happen. Market makers are just not going to allow that to happen. Not this time on a Friday. If this dropped all the way back away down here, it would be some day, wouldn't it? If anyone's not hit the like button, I see there is 34 of you lovely people watching, but only 17 likes. Can you guys make that parity, please? Clicking the like button for me. Exactly, knockout. Exactly. So I do suspect, though, more chopperoo around here. But the cynic in me wants to see this, wants to see, capitulation. Yeah, exactly. Gold tends to have a pump when. How is the dollar looking as well? Is the dollar rising now? It'll be having a pump now that it's. Well, in fact, it can't be. If gold did you say it's all time highs, Pike? Gold near all time highs. If gold's at all time highs, then the dollar must be down in the day. That correlation is normally pretty strong. This is going to be. This is got the potential here to. Oh, this is potential to collapse here, guys, which is good. What we don't want to see is this: is the offer be pulled. We want to see continual hitting into the bid, and the bid to be pulled at the same time. So they're absorbing there. 224 absorbed at 82 and a quarter. Sellers need to be aggressively taking all the buyers that's there in order for this to continue dropping aggressively. Notice there's not that much negative delta coming in. Some action. God, it's quite good that we're having to reset the DOMs so often here. It's nice. Wow, NQ is going. Okay, sort of defending this at the moment. Okay, let's draw up the VWAP area. So, and its value area low is 74 and 3/4. here, and then while we're at it, we'll just draw up the low where stops will be triggered. 71 and 3/4. So it's not too far away now, is it? Okay, so notice this, that the buyers are actually trying to defend here, and we're seeing it. They're seeing the offer absorb. We want to see the offer continually be strong, and then start to aggressively hit into the bid. So we need to see the offer stay strong because buyers are trying to press here. We want to see NQ to continue the dumperoo. We want to see NQ get down to about this range down here. Let me know if you guys have got any questions or if we're just observing the dumping. You guys get any open trades? If you have, here we go. There's NQ dumping. Right, watch these levels. Initial balance high level coming, and VWAP area at 74 and 3/4. This is really going, eh? Wow. Look at this. There's not even that much negative delta coming in as well. Just the bid has been pulled. Here we go. Okay, check the stops below this. We've got it drawn up. 71 and 3/4. Buyers are trying to hold here right now. Yep, so VWAP does get some size off. Let's see if sellers continue to drill. Yep, Sin Daniel just asked that. You can have 5. Here we go. Yeah, I would probably say it's maybe 2 to 3. Well, probably more than that, Colin. I'd probably say it's more than 2 to 1 for the speed that moves. It's probably 4. It's just so much more volatile. Right, 5 minutes to the volume. Couple options here. Now that we've got this lower, we could. There's been a lot of profit taking. We could go back up here and basically fill out this low volume area. I think we're going to really. I mean, I don't know. It just seems it would be relatively surprising if this cracks here and continues to dump all the way down here. I would love to see it, but NQ is trying its hardest though. But this would be a great spot for the data coming out in 5 minutes. Not data, sorry, just market on close data coming out in the next 5 minutes, where we'll see buyers are starting to get a little bit pressing here. So note this should be going up, right? So watch price. Buyers are pressing. We want to see how's the offer reacting. Is the offer staying strong or not? This is a great level for these firms to basically hold price right here. Yeah, Pike. I mean, this has been actually quite a good, some actual direction for a change. Normally, when we watch this on stream at this time, it's garbage. It's normally just faffing around, and then we're waiting for the market on close data to give us any direction, like at all. Right. So the market's still going down, yet Delta is they're trying to push here. So just keep an eye on this here. Watch how this is respecting for price. We can see that the offer is still absorbing. His price is not going up. So if we do get down, let's see how we react here. I need to remember and keep my arrow here. The offer was pulled there. This is some action right now we're getting, guys. Dudes and dudettes. Okay, here we go. Watch the levels down here. We hit it by a tick, and then let's see if the offer is going to be pulled. Data coming out in probably, what, 1 minute? No, they just pulled the offer there. Look at this. The market just moved up 6 ticks and only a few hundred contracts have traded. So they literally just hit into the bid there and pulled the offer. So I would be surprised though if they don't sell into it more. Take it down. One minute remaining till this data comes out. Here we go. Let's see if they can hit some size here. Here we go. Stops. Yep. Here we go. Our sell is going to continue. This is a last chance saloon, by the way, for buyers. Wow. Here we go. Someone's absorbing here. 1,000 contracts absorbed in these two prices right here. So notice here, see if they're going to continue to drill it. They do. Wow. This is a bloodbath here. What an M period that is. 30 minutes, they're basically going to take the daily range. Wow. Gosh, what a day. No, just mark it on closed data, Pike. So now we have basically sellers need to start taking profit, to be honest, and then we'll see what they do. We've still got another probably 10-12 minutes of this, so a lot can happen in 10 minutes, but this has been a huge move. Jeez, oh, 3 billion sell MOC data, wow. Some real size just come in there. You see that? Someone just come in and fat fingered on the buy. There's a huge market buy. Some size must have come into the underlying equities there. You see that? Wow. Can anyone check the time and sales for that? That was a huge order that just came in by the bubble. But do you see that delta was down here? Wow. God, what a way to end a week. This is there's more action in this 30 minutes. I think coupled combined Monday, Tuesday, Wednesday, more action in this 30 minutes here. Just goes to show you though that you need to be trading on Thursday and Fridays where the volume actually is. The volume is highest in Thursday and Friday always in the last 3 years. On ES anyway. Yeah, good week though. Good week, Nicky boy. Okay, we are stabilising a little bit around here. Good amount of buying it's come in though, and we're just absorbing it. There has been 4,000 delta come in and we're working its way down. So the offer is still really strong right here. The offer is at 70, 71s. Peer. Juice missed, yeah. Look how strong this offer is, man. Delta, there's like 5k delta come in here and the offer is just gobbling it all up right now. If this offer gets pulled. Wow. There we go. They are really buying this thing, right? Look at the amount of delta, that is insane. What a way to end the week. Jeez oh. So delta is now just breaking high of day on delta, but price is not. That's insane. Shows you how strong the offer is. Yeah. Did you get filled in your 71s? Did you pull it, Nick? Scratch that. Yeah, I mean to be honest, look at this delta. I mean the offer has just absorbed 5, 6k, probably more than that. It's absorbed the guts of 6, 7,000 delta absorbed on the offer. Which they're going to need to try and push it down a little bit, right? See if they do. Jeez. Delta cracking highs here. Yeah, absorption city right now. So they're probably going to bang it down, and then this data is going to come out and they're going to get to close their positions. So I wouldn't be surprised if they try and take it another 10 ticks or so down the way, so that when this market on close and algo time comes out in the next 4 minutes, they can basically get to close all their aggressive absorbing positions down here and then work their way out. Let's see if they can bang it a little bit more. Yeah, I mean, if it was me and I was absorbing all of this up here with all this size, I would be wanting to get a little bit more bang for my buck. So I would be banging it down a little bit more for the data coming out in 3 minutes, and then I get to then just close all those positions. So let's see how far they can drill it, because when this comes out, they're going to need to close these absorbed positions, and they have to do that on the bid. So let's see if they can do it. I don't know if you guys have got any questions. This is a great example for the Delta video. I need to note this. POC for regular trading hours has just changed now down here. Okay, so where would we probably... I mean, there's no way they're going to bang it all the way down here, are they? Surely not. But this is some of the most absorption I've seen in easily the last 4 or 5 weeks. It's not very often you see 6,000-7,000 delta absorbed in the offer and the market working its way down with this amount of buying, right? Colin, I think I do, buddy. I think I do. So right, when this comes out in 1 minute, I'm expecting the market to go up so these guys can close out their absorbed positions. We'll see how to do it. That would make the most sense to me. So they got to hit it down here about another 10 ticks, and now they just get to close out their positions on the bid. And then they'll probably drill it back to somewhere around about this area. That would make sense. Let's see if that's how to do it. 30 seconds. Looks like it's happening already, to be honest. Wow, look at the amount of selling it's just come in. Here we go. Yep. That's crazy. It's like they give it to you in a pamphlet. I'm telling you, in my previous life, I was a market maker. Must have been. It just makes sense, to be honest, because you're not carrying all those short positions, right? You've just absorbed like 7-8k, maybe more, 1,000 contracts. You need to dump them, so you're going to bang it down lower, and then you're going to flip and work the bid. When I just tell you, dude, I think it is 4 ticks, and I'll quickly tell you. But that's pretty much all she wrote. We're now just going to consolidate around here. Charts set, no, it's studies. I'll tell you, yes, here, yeah, you're right, 4 ticks, dude. 4 ticks, otherwise it takes up half the screen. Do you like that, John boy? Yeah, just one of the things you guys need to think about is, like, what would you do if you had 8,000 contracts? You know, if you were the one that was absorbing that, what are you doing? You're not going to absorb them to take 2 ticks, are you? You're going to take them down for 10, and then you're not carrying them over the weekend, so you need to liquidate them. So you then flip to the bid, and you know that algo time's coming in, where that's the time you can literally get out of those positions. So you then flip the bid and you take it up in the way there, so you get to double dip. And now that that's now done, they let out their positions. Nothing actually happened, but they just worked the book. It would be amazing though if you had the size to be able to do that, you know. We have to really watch carefully and play our steps because we can get run over. These guys have that much money but they can do what they want. They've just absorbed 8,000 contracts. You know, if you can absorb 8,000 contracts, they're going to bang it a little bit more, right? It maybe only cost them another 2,000 to drive it down, but they're still net short 8k, you know? Um, just wish you'd been on the right side, John. Sin. Guys, I'll need to. It's hard to explain. This what we've just discussed in the last 5 to 10 minutes is simply just screen time. It's how you get to see it because let me zoom out a little bit, right, and compress this. Okay, so the reason why my radar was going off, right, is we broke highs with Delta, and Delta should always be following price. So we were down here while Delta was making all-time highs. Well, not all-time highs, all-time highs in a session, right? Fresh highs, we should say. Now, what you should see is very, very simply, I'm doing the wrong thing, I need to get my pen out. When Delta is doing this, the price should also be doing this. It should be going up, but it was not, right? Price was absorbing and just working its way down. It was literally like a wall. It was not going up the way or following at all, right? And when that happens, someone is literally standing in the way and saying, you shall not pass. They're just absorbing all of the buying. 8,000 contracts. Now that's a huge firm. It's a huge firm that's absorbing that, and probably multiple firms, but most likely the same one. And you obviously know that the firm that's been able to absorb 8,000 contracts, these guys are not doing that for two ticks, right? They're going to probably want more than likely an ATR out of that or something along those lines. So they bang it down, but also it's not a coincidence that when they bang this down to this area down here, it also happens to do it when the 4 o'clock time comes, because that's when all the stocks have been closing, all the algorithms are basically closing all the positions for the day, and they then absorbed all of those prices and drove price down. And then when that comes out, they have the liquidity with that algo 2 to 3 minutes that comes out to get out of their positions. That's pretty much how they do it. Because with this amount of delta, the market should be up here, in my opinion. So there's a huge disparity there, right? With that amount of delta, with 11,000 contracts, the market should be up here, right? We have some days where the market go and bid and it ends at 11,000. We've just seen 11,000 contracts in 10 minutes. You know? So basically, the delta, just so we're aware here, is a difference between aggressive buyers and aggressive sellers at market orders. So if there's aggressive market orders coming in and limit orders are stopping it, these guys are still getting filled in their positions. So they don't want to be carrying that overnight, right? So does that make sense? Have I explained that well enough? I'm going to cover this on the video that we covered over the weekend. This is a fantastic example. I need to bring this up and make sure and discuss it. Maybe take a snippet from the video. Yeah, no, exactly, Nick. That's the tricky part with that. I mean, in general, though, my sort of thought process with that is when you're seeing this behavior, you're certainly not going to want to be buying it, to be honest. You need to go with these guys because at the certain time of the day, these guys need to close the positions. So you're really only going to maybe targeting like 10 to 12 ticks on that move. Um, but it's just the main idea about this is just understanding the market concepts and how they do it. And as you know, when you watch the book enough, you just get in sync, you get in tune with the market, you understand what these firms are doing, and that's the key to the game, right? When you watch this enough, you become in sync with these market making firms because they're the guys that have enough size to hold prices and move the book, and you need to go with them. That's simply it in a nutshell. And understand the competition you're up against. So Jasper, that was why price went down here. So if you rewatch this when I was saying this, right? They absorbed all of the contracts round about this price, okay? All of the buying was absorbed round about here. So they then get to hit price down here, right? And this is it. This is the move, right? So let me get the chart calculator here. So say they get here to here. This is the move, right? That they get it. Okay? So we're looking at from here to here, it's 42 ticks. That on those contracts is a huge move. Huge. Maybe even if even half that. If it was say down here, right? 24 ticks, still a huge move. And what you need to remember as well is they are working both sides. So they absorb all of that buying and then they're basically net short. Okay? They then spend some more money to drive price down because if they're net short 8k, say let me explain this. Okay, so just say for talking sake it was here, right? The net 8k short from an average price is 70 and three quarters, right? They then aggressively sell into the bid. They spend 500 here, 500 here, 166 here, 182, 294, just as an example. But they're still average net K, 8k net short from say this price. They don't need to spend as much money to drive it down, okay? And then they may not make as much money in these positions, but they're still again aggressively net short from this area, right? And then when they drive price down to here to this arrow, right, they do this at the time when the large volume comes in, where they can then get out of their positions, so they have the limit orders down here. And then you better believe it that when they're getting out of these positions, they then stop the selling, and then if they're not even out of all their contracts, they can then actually be net long, and then they can drive it back in, and then they can start driving price back up again because they're out of the sell positions. They then maybe have a little bit of net long that they're in, and then they can drive it back up and basically do the exact same. That's all the market is. This exact equation of what they're doing is aggregating orders, being net long and net short in a position, driving it down, taking off some of the liquidity. And you maybe be thinking, well, when they're net short from this position, this is why the market goes to liquidity areas, to stop areas, because these guys that are short net 8k from up here, they need to go to an area where stops are going to be so they can get out of their position, right? Because they know stops are going to be there, and people that are selling, they get out of their position with buying, right? And these guys that are originally selling, they need to get out of the position by buying, so they meet at the stop area and they get to take the stop orders as their exits, right? And then in the process when they're doing that, they get to cover out their positions, then they flip and they work the bid, right? Then they start aggregating and absorbing on the bid down at these levels, and then before you know it, they're net long and then they bang it back into the range. There we go, classic sweep. That is the, you know, concepts and what goes in to a sweep and just how they do it. Does that make sense? Hopefully my drawings and the way I appreciate it's a bit of a word salad, but does that make sense? Hopefully you guys enjoyed that setup. I'm just going to pop this in the chat for anyone that would like to support the channel. I know a lot of you lovely people already are, but for anyone that wants to support, you can join the Discord as well while we're at it. But let me know if you get any questions about what we've just discussed there, right? Because I feel that that's pretty important for you to understand the cycle of the market and just how it moves, right? Once you understand and these large firms, your Citadel, your DRW, your JP Morgan, your Goldman Sachs, right? They're the big boys who are they are literally spending so much money across different asset classes that they can literally walk into the market and name a price. They could say, right, the market goes to 64s, we need to unload, absorb at 64s, right? Then they're going to be net long. They then bang price up, and they can take the market wherever it needs to go, you know. Because if a net long 4,000 contracts from a price, in order to get it, in order to get this from from say their net long here, to get it to 67, okay, more people join the party, and then they can spend some more money, you know, just to drive price up. Completely different field to how we look at the market. These guys work both sides of the book, right? We have to play directional. We can't do what they're doing at all. They can have, a long account and a short account, and actually have it running at the same time, So they're always either net long or net short at a certain time for that day. They have positions that they close out that day. They have positions that they're carrying over depending on what their analysts are saying. What clients have got positions that they're phoned in where they're quoting bids and quoting offers on them. Just how it works. It's what makes the market move. And the sooner you realise that's what makes up the market, nothing actually has to happen with the underlying stocks. Nothing. All it takes is Goldman to be net short from a certain price and want to take some profit. So they spend some more money drilling into the bid, right, to take price down that causes more people to sell in, and then other firms then jump in, and before you know it, you're down 20 ticks, right? And then they then say, right, we're not taking it anymore, let's take out some profit. So they work the bid and stop price, get out of their position, and then bang it back in. And then they're continuously working the high and lows of ranges and doing it. This is extremely obvious because it's an accelerated move, and we've really been going at it. But this type of behavior happens in smaller volume all day, from micro range to discovery to pullbacks. It happens all the time. So I'm aware I'm rambling on here, guys, but yeah, exactly, Nick. Sometimes when those plays, dude, like sometimes MOC is shit, but when it gives you a playbook like that, and typically my pre-market, like what we've discussed, how we drew up the plays, discussed them, this is what I do for my pre-market session. I draw up those levels, have a rough idea what's going to happen, and then when the market comes in, into those areas, I've already done my analysis. I know roughly what I'm expecting and what's the highest probability play, and then you can also then have data to back it up as well, your own data and volume data, from history of the market. Yeah, Jasper. I mean, these firms don't really give a shit about retail orders. It's literally just extra money in the pot for them. They're fighting against other firms, and most likely pension funds as well, where pension funds are typically net long all the time. They're buy side in the market. Um, you know, Investment banks and hedge funds have enough size to move it both ways, and they're not only buy side, so they can be net short and net long. Retail is just extra money that just gets thrown in. So typically when the market does that, you just see someone that doesn't know what they're doing. They buy into it because they see the market's going up, but they don't realize that basically the offer has been absorbed by large firms that we were discussing. right? So they absorb all that. People buy into it because they go, oh, look, it's going up. And then in essence, they just slam it down. And the people that bought up here, whether that be it doesn't even need to be a person. It could be a different fund. It could be anything that didn't catch that move. They need to start covering down here, which provides more liquidity for the net short people to get out. But take this concept and apply it to sweep areas, because this is exactly why, if we take and go back up here, this is exactly why this happened. Now let me full screen this. Right. It's not a coincidence that the market stopped here, right? It literally goes up, hits it by a tick, right? And what you'll find here is some large size come in the tape to bang it to get through this area, right? And what you'll then find is they had enough here to get out of their positions, and then they'll work the book, they'll flip and work the offer up here, absorb some more buying, right? And then what do you know, they then pull it back in, carry out another absorption level, and then absolutely dump it. And this move here is a combination of fresh shorts coming in, right? And of course you're going to have some long liquidations in here as well. So the bid gets pulled. So they basically here they're dancing around, okay, and absorbing on the bid, okay, and basically getting out in some of their positions from here. And then when the market goes down, all they do here is they pull the bid, right? So instead of absorbing here on the bid side, they pull it because they're actually net short. They pull the bid, and then you have a cascade down here which causes these moves, which is a stop. It's a long liquidation, so everyone that bought has to cover. You have the bid being pulled, and you have fresh sell positions that come in, which we saw by the delta as well. So this is a cascade, and that's what happens in this market. But there's a reason why when we discussed this, it's happened on the DOM. There's a reason why they do it up here, because there's going to be an area of stops around this point, and this is why the market stops there. They always take it right to the extreme. They're not going to take it. I've heard some people say things like, oh, they take it to the candle of the wick or whatever. No, they don't. That's not a thing, right? Do you think Goldman Sachs give a shit about a candle of a wick? Absolutely no chance. They're going to take it to the area where the most stops are going to be done. Now, when you first start trading, everyone it says, right, oh, so we're going to go for a short position. We'll put our short above here, and then this is why the market takes it to the literal tick, right? It's the most textbook stuff ever. How they do it. Hope I'm making sense here, because I feel like this is a very good sort of talking point and discussion point. I've just been calling you Jasper. It's Jazer. But you're right. It's basically they're fighting against each other, and we're just extra meat for them, to be honest, because we can't move the market. Every single one of us here could put every single bean of our wealth into the market at that time and not move it a single bean. That's how powerful institutional money is. And here's the kicker. See if they actually blow up and fail as well. The taxpayer has to step in and foot the bill. That's fantastic when you think about it like that, isn't it? Yeah, at least the notice, dude. Jazer, am I pronouncing that correctly? So it's always nice when we get some good volume coming in when we're on stream, because it creates fantastic talking points and great concepts that you can apply, which I hope you guys hope you guys find it valuable. Well, they don't come out of nowhere, Jasper. Sorry, not Jasper, Jazer. They don't come out of nowhere. They always come in at these times. M period is notoriously a wild 30-minute period. M period is the close, market on close data, and all of the algorithms are closing their positions in underlying equities as well. So it's wild. Do you know what? I'm just going to call you Jay. How's about that? Because I can't unsee Jasper now, so I'm going to say Jay. Hope you don't mind, dude. So yeah, loads of cool points. Terence, I'm glad you enjoyed it, dude. Okie dokie, matey. So now that that's over, we pretty much just faff around. Look at the difference now since that's over. How delta is absolutely flat and doing nothing. We should make it like a market making workshop. Oh, Nick, nice. You're working over the weekend on some setups. Very good. Yeah, I'll probably do some reviews of the week tomorrow as well. I'd spend Saturday morning doing that and making a video for everyone. So I'll probably do that tomorrow myself. Trader Boy, if I was trading ES today after we broke the initial balance high, I would have been looking for longs, and then I would have looked to, once we swept the high, I would have looked for a fade opportunity back to what we carried out. And I wouldn't have taken any trades until PPI came out. I didn't do that in treasuries either, and then I wait to see what the news brings. I would have waited for the initial balance to set and then see where we were at, and then that gives you the sort of state of play for the day to determine, it gives you your sort of ballpark where you're in, sets the tone. Yeah, exactly, Daniel. It's the thing is as well is it's really important for you guys to ask questions, because unless the volume like this happens where the plays I see I can talk about, it's hard. So the more questions everyone asks, the easier it is to sort of bring up examples in my brain. Do you know what I mean? Because it's hard. Do you know what I mean? It's hard to talk about something unless you're asked questions. To be honest with you. Yeah, Trader Boy. I would have probably went for a slightly larger stop today and size down just with the volatility. So if I was typically trading, 2 or 3 contracts, whatever, I would have probably went for a slightly larger stop and target, just because I think the book was a bit thinner today. So that's a couple of things that I do. I check the volatility for the day, and then you can have a slightly bigger target and slightly bigger stop, but then that doesn't mean you risk more. I would ultimately still have the same risk amount per trade, but give it a slightly a little bit more breathing room just due to the volatility on that specific day, dude. But yeah, be nice to do the market making workshop with that, dude. It'd be really hard to put all that down in paper and discuss it in a video, though. That's the thing. It's take a while to build up the examples on it. But these are fantastic talking points when they happen because it's once you learn this, you can't unsee it. You know what I mean? It gives you a real insight into how the market actually moves and why they're doing it. And you know, someone that has the facility to absorb 8,000 contracts, man, they're not taking two ticks, right? They're going to do it and bang it down a little bit more to get some, to make sure the juice is worth the squeeze, you know. No problem, trader boy. Nice. That's what I like to hear, dude. That's what I like to hear. Yeah, it allows you to be a little bit more, you know. I don't know. It's nice to understand the mechanics of things and why they move and what's at play. You know, you need to remember this was people that did this before it was algorithms. You know, just to see the people. So it's still the market is just a representation of human psychology at the end of the day. But anyways, I'm more than likely going to grab some food. The timed absorption with the algo coming in next, that is something to remember. Yeah, exactly. That's exactly why they do it because they know that they'll see. Now, here's the thing: the reason why the market's not moving right now is because they can't get out of their positions. These guys need volatility and volume to sling size so they can get filled in the other end. And this is why the price goes to areas that are congregated with stops, not because the market's directional. These guys are pushing it there because they need to go to these areas so they can get filled. Because if you're a large trader, you can move the market, but you don't have the same problem as we do. We need to guess the direction. These guys need to even get filled. So they need to basically, you know, wave with the right hand and do something else with the left so they can get filled. It's a completely different game they're playing. They will be having something similar to this will happen, right? They'll have a sales team. I'm simplifying this for you, right? But they'll have a sales team where they will be taking calls for and quoting best bids and best offers, right, below the current price, right, depending on the asset, big funds. They'll be making a markup in that. They can then decide, do they want to hold that inventory or do they want to get rid of it, right? Now they'll probably try and execute these on a daily basis, right? Um, and every day these market making firms will be having a call between risk, sales, and the actual people that are executing these trades. Now, a lot of it's done with algorithms and icebergs now, but they'll be having a meeting and they'll essentially be saying, right, we've taken this order, this is the deal, what's going to happen, how are we going to execute this position? We've got 8,000 contracts to dump or buy, right? We want to get this off our books because it's too much exposure. That comes from the risk team. And then they need to then work out that position, right? And they need to decide and say, right, well, we're net long in general. We need to look to sell out and get an average price. So we ping it to here, and we can buy it up, you know. And they literally have um, an actual thesis and plan for how they're going to get filled in these positions. It doesn't just randomly go to areas. Do you know what I mean? I appreciate people see the market's random and stuff, but I don't think so. Not when you've got 8,000 contracts that you can absorb on price. These guys can stop the market on a dime if they want. No problem, Jay. So, um, the thing is, they don't know where the stops are, but they'll know, for example. So these algorithms are so sophisticated now, right? But very typically, any investor or trader in general, if you look at retail, people that swing trade, they put their stop above the next swing point, right? It's the most classic. If you pick up any textbook that says, "Oh, you're swing trading," right? You buy the break below of an inside day or something, and you put your stop above, the swing high, right? So everyone that is short there is most likely the stops are going to be at the next swing high, right? Just typically. And along the way, there's going to be people stopping out, smaller traders and funds, so on and so forth, right? They're going to be stopping out. But most of the stops are going to be congregated somewhere around that area. So they know that when they drive price up, they can then get out of their positions. And it's not only the stop orders there, because when the price gets to these areas, you have new fresh orders that come in. You have breakout traders that come in, right? So let me quickly bring this up to explain this. When we got to this area here, right? When we got here, now I'm going to just draw a line in the sand with this. So imagine there's going to be some stops here, right? Right here, there's going to be stops, okay? They bang it into this area, they take some stops. But not only is the stop positions that go off, which gives these large firms the liquidity to get out of the long positions, right? There is breakout traders that are buying this, and these large firms just basically stack on the offer, right? Stack on the passive offer and selling, right? And they absorb all of that, which is actually them getting out of their long positions. And then the market then pulls back, right? The market pulls back down, and then we just see another little sort of distribution of price. And then all these people that bought here and here, their stops are going to be here. And this is why I drew on the chart. I marked out this level and said, I can't remember exactly the price, but we had it drawn out if you want to rewind back. You have these guys that are buying, if they were stubborn, they have to stop out. Everyone that bought here has to stop out. Okay? Then you have fresh selling that comes in. So you have long liquidations and people that buying, in order for them to get out, they need to become a seller. For every buyer there has to be a seller, and for every seller there has to be a buyer. That's how the market works. So you have the long liquidations that drives price down, then you have fresh sellers that come in, and then that's when you have uh, the cascade that drives price down, right? Does that make sense? So they don't necessarily, Jay, they don't necessarily need to know what the stops are, because it's not just the stops. That just is one piece of the puzzle. There's breakout traders in there, and stop positions in there. And then when they go up there may be another firm that starts getting involved and it provides them other liquidity. Do you know what I mean? So did that make sense, Jay? Um, like pretty much when they get too long themselves, they need to cover because prices due a pullback, but they can't just cover because if they just decide to sell market and get out of the long positions, they'll take it back like 30 ticks because they've got that much inventory. But it's good with the screen time and actually getting some live market examples rather than me just putting up a chart, right? It's easier when it's in real time like this. But if you've not worked your way through the whole order flow series, we cover a lot in there. So hopefully there's some nuggets in there for you, dude. Anyways, I've rambled up enough for now. I hope everyone has a fantastic weekend. I'll be chilling in the Discord for a while this evening, and also I'll get a video out tomorrow for everyone. I think we're going to cover Delta. There's been some fantastic examples with Delta, so it'll be a good video to bring out tomorrow. Thanks, Terence. Hopefully you do too, buddy. Thanks, Tom. Nice. I'm glad you guys enjoyed it. No problem. No problem. I'll speak to you guys tomorrow on the video. And we'll catch up on Monday. Let's hope for another great week. Peace, everyone. Have a great weekend. Thanks all for your time.